Welcome to Business Reporter's Supporting SMEs campaign. For decades, expensive cross-border payments have been a fact of life, thanks to the complexities of collecting and converting currencies, building banking networks to distribute payments, and managing pricing while complying with rigorous financial rules. However, as new players such as fintechs and neobanks enter the financial scene, old certainties about banking and payments are going out of the window. Accomplishing the same transactions with a similar, if not higher level of security has become faster, cheaper, and more transparent. The low-cost and modular infrastructure enabling these advancements presents new opportunities, not just for financial service providers, but also for their clients. Today, we've invited Steve Lemon, co-founder of Currencycloud, a cross-border payments infrastructure company and recent winner of a £10 million BCR grant to support SMEs, to discuss how small and medium-sized businesses can leverage these new financial service offerings to increase their slice of the e-commerce cake. Good morning.
Morning.
So let's start it from the beginning. You started this company 10 years ago. Tell us a little bit more about what got you into fintech and what your aspirations are.
10 years ago seems like a lifetime ago. I've always worked in foreign exchange and international payments, and I worked in an environment previously where we were providing better exchange rate and better service than was commonly available from the banking environment. But even then, there were huge imbalances in pricing that individuals would get versus companies. There was huge levels of opacity in the cost of payments and the cost of foreign exchange transactions. So we set the business up with a view to righting what we thought were those imbalances and righting those wrongs. And we had an opportunity to do it differently with the use of new technology that was coming through. This is at a time where the internet was just really getting into its stride. Alibaba wasn't really the household name that it is now. And we had two questions in mind. Why is it more expensive to send $100,000 payment to somewhere in the US than it is to send a package via UPS? Which, when you think about the amount of human hands that come in contact with a package versus the amount of human hands that come in contact with a wire payment, it's ridiculous. And the second question was, why is there such disparity in foreign exchange pricing? Why does one entity get a different price to a different entity for the same transaction? And I guess our ambition, our ultimate goal, was to democratize foreign exchange and payments and make it equally accessible and equally fair for all.
How have customer expectations changed when it comes to e-commerce payments over the last few years?
So we're seeing a rise in requirement for micro-enterprises or SMEs to have multiple in-country banking capabilities, and the rise of these SMEs to be able to invoice their customers in the customer's domestic currency, to remove friction from the customer's point of view and take control of the payment process. But for an SME to go and open banking facilities in country, that's remarkably expensive and difficult. Whereas organisations like Currencycloud and our global account, we offer virtual bank accounts, in-country virtual accounts. So it looks like a domestic bank account for the merchant, but it's a virtual account, so it's easy to establish and set up at the flick of a switch, effectively.
So what's in the way of SMEs meeting these expectations?
From a collection and payments perspective, the underlying service that the SME needs is no different to a large organisation. Perhaps there's a wider range of requirements for a larger organisation, therefore a larger opportunity for the bank to monetise. But the underlying requirements are the same. So that lack of democratisation really does hamstring SMEs, I think.
So given that, how can cross-border payment infrastructure providers help FX brokers and neobanks? How can they help them service the needs of the SMEs?
If you're a traditional bank, you're operating on a banking platform that effectively utilises technology that's decades old, back to the 60s or 70s perhaps. And the fact is that's just no longer fit for purpose. Of course, that kind of technology predates the internet, it predates cloud computing. Whilst it's robust, reliable, bulletproof, it's always there, it's generally not going to fall over. Customer expectations have far outstripped the capabilities of that kind of technology. It's really difficult as well if you're a bank, because your priority is to make sure that the lights stay on and the platform stays in operation. Payments and the movement of money is the lifeblood of any organisation, and it does have an impact on the economy. So banks find it very difficult to add new features or components or functionality of a core banking platform, because it's just really difficult to interfere with it. It's a high risk thing to do, which is why we're seeing the beginnings of a more wholesale move towards collaboration between banks and fintechs or new wave digital companies.
You've talked a lot about change and how things are developing. Let's look into the future. How do you see the financial markets developing over, say, the next 10 years or so?
I think the expectation of individuals, the consumer expectations, are going to morph into expectations in the SME space. Consumers have seen a huge amount of innovation and transformation in payments. As we were touching on earlier, you can make a payment at the swipe of a finger, or you can do your shopping on the train on the way into work in the morning. But SMEs have still got a fairly fragmented and disjointed workflow, perhaps fed into by a number of different service providers or suppliers. But as millennials and Gen Zers move further into the workforce and move up into positions of responsibility or more responsibility, I think the weight of expectation is going to transform into the SME space as well. The service that SMEs receive from the main banking establishment, the traditional banks, needs to improve. We're seeing challenger banks, the likes of Monzo, Starling, Moneys, Revolut. These guys are coming in and unencumbered by legacy banking technology. Digitally native organisations are able to offer a much better, much more connected, much more joined up, much more seamless solution to their customers, and they're moving into the business space now. So I think you're going to see a continuation of that trend. I think you're going to see increased expectations for democratisation of FX pricing and payments pricing, and just a broader set of capabilities.
You talked there a little bit about these sort of new payment services, disruptors, if you like. You know, why is trust so important when it comes to their long-term success?
When you're dealing with people's money, trust is everything. It's absolutely paramount. I don't think trust is a problem that the banking establishment has, even in a post-financial crisis world. Ironically, everybody still has a huge amount of trust, credibility, and faith with their bank. But when you're dealing with individuals' money, when you're processing payments on behalf, or in our case, when we're processing payments on behalf of our customers who are processing payments on behalf of their customers, the weight of expectation there, the way that you handle client money is paramount. It has to be there when you say it's going to be there.
We've talked a lot about this rapidly changing environment within financial services. For anybody who's watching, for key decision makers who are watching, what key takeaways would you like them to remember from this interview?
Business is global. Globalisation is a thing. That isn't going to change, despite the best efforts of people like Donald Trump or the rise of populism. The genie's out of the box on that. The world is getting smaller from a business perspective. It's never been as easy to build a business and sell your goods and services to anyone else in the world. Building an online storefront is very easy, but the thing that needs to keep up and support that change is the underlying infrastructure to support that. Obviously, you've got a requirement for supply chain management, but actually processing payments, collecting funds from your customers and making payments to your suppliers has to get better, has to be seamless and smooth, and has to work every time. And there is a growing realisation in the banking community that actually one bank physically cannot do it all. There isn't actually a bank that does it on a global basis anyway. So the rise of collaboration and participation of organisations like Currencycloud into the service providers is only going to become more apparent and more necessary.
Well, that's exactly it, isn't it? You know, if at the end of the day, that level of trust, that level of convenience, the democratization that you were talking about, it's been really interesting finding out about the future of the financial markets in this environment. It's been great finding out more. Steve Lemon from Currencycloud, thank you very much indeed.
Thank you.